Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be here.
So today we're doing a bit of a deep dive into a mix of recent tech news, stuff that's really got the markets talking, maybe hinting at future trends.
Yeah, quite a range. We've got Tesla's market performance, the whole AI demand picture.
Right, and then some surprising things like Chinese tech looking at U.S. listings, a new fund for American manufacturing.
And even a space industry investment getting some buzz.
Exactly. So we'll try to run through it quickly, but, pull out the key nuggets you need to know. Sound good?
Let's do it. Where should we start? Tesla.
Yeah, let's kick off with Tesla. The stock's had a rough year so far, hasn't it? Down like, what, over 40%?
Yeah, easily the worst performer of those magnificent 7 stocks. And those first quarter delivery numbers were pretty concerning.
Lowest in almost 3 years, I read.
That's right. It really puts the focus back on, well, other things.
Like Elon Musk's influence. It feels like the vibes around him matter almost more than the fundamentals sometimes.
That's definitely a theme. A market sentiment really tracks his announcements, his perceived engagement.
So everyone's watching the upcoming earnings report, hoping he'll say something to reignite that confidence.
Pretty much. Maybe news on robotaxis. They mentioned that Austin launch potentially in June.
Or the cheaper car. That's been talked about forever.
Exactly. It's funny, even Tesla's own 10K filing kind of highlights how much they depend on him.
While also noting he splits his time, right? With SpaceX, Neuralink, maybe even DOGE.
Yeah, that was mentioned. It's that classic key person risk. Investors worry if he seems less focused on Tesla.
So the idea of a re-engaged Musk is seen as a potential positive catalyst.
Definitely. More time, more attention purely on Tesla. That's the hope.
Okay, but beyond the personality cult, what about the actual car business? Those automotive gross margins?
Right, excluding the regulatory credits. That gives a cleaner picture of just the car-making profitability.
And it's sitting just north of 10% now.
Around there, yeah. Which is, decent, but maybe not what it once was. It's the core business health indicator.
So while everyone talks about FSD and Optimus bots,
the actual selling of cars still needs to be strong.
Mm-hmm.
And things like robo-taxis, well, that's a long and probably expensive path. Just look at Waymo.
Good point. They're still burning through cash, right?
Significant amounts. It takes time to monetize that kind of tech.
There was also a mention about Musk's political commentary potentially affecting the brand, especially maybe in places like Europe.
It's a possibility. Brand perception can be influenced by that stuff. But on the other hand, Teslas have gotten cheaper in the U.S.
Maybe they have some tariff advantages.
Could be, yeah. So it's complicated. Lots of push and pull factors on sales.
Okay, let's switch over to cloud computing and AI demand. There was news about AWS potentially pausing some data center leases.
Yes, particularly internationally. And it kind of mirrors what we heard about Microsoft doing something similar earlier.
But Amazon pushed back on that, didn't they? Said it was just routine capacity management.
They did. They emphasized no fundamental change in expansion plans. But investors are watching this stuff closely.
Why? Because data center spending is like a proxy for cloud and AI demand.
Exactly. If the big players slow down building, it makes people wonder, is demand maybe cooling off a bit? Especially for AI.
Right. Because the return on investment for AI, it still feels a bit uncertain, despite all the hype and spending.
That's the big question hanging over the market. Everyone's investing heavily, but where's the widespread profit showing up? It's still early days, maybe.
So upcoming earnings calls are key for getting any clarity on AI monetization.
Hugely important. Though honestly, there hasn't been a ton of new concrete info lately. Lots of enthusiasm, less hard data on returns.
Although some reports suggest semiconductor leaders are still pretty bullish, expecting more capital spending.
Yeah, there's definitely confidence in some quarters about future growth needs. It's a bit of a mixed picture right now.
Which leads to the tariff question. What happens if companies just clam up during earnings calls? If they say, look, with tariffs so uncertain, we just can't give guidance.
Oof, yeah. That could really spook investors, couldn't it? Uncertainty is tough for markets.
Speaking of uncertainty, the market tone feels kind of cautious, even with some buy-the-dip action. Is it because this tariff stuff just drags on? Unlike something like COVID, which was more sudden?
I think that's part of it. It's not a single event. It's this prolonged ambiguity. People are hedging more. But on the plus side, valuations aren't quite as stretched as they were.
So a bit more margin of safety, maybe.
Potentially. But those underlying worries, especially about actual AI demand versus the hype, They haven't really gone away, even with companies like AWS saying everything's normal with data centers.
And it must be incredibly hard for companies to plan or give forecasts with tariffs changing almost in real time.
Absolutely. The scale and speed make clear guidance almost impossible for some businesses.
Okay, now for something a bit unexpected. Chinese tech companies apparently looking more seriously at U.S. IPOs again, even with all the trade friction.
Yeah, it's surprising. One thought is maybe it's linked to that DeepSeek AI breakthrough in China, perhaps boosting general investor sentiment towards Chinese tech.
And it's not just the big infrastructure players, software, even education companies.
Right, like Smart or Chachi. In fact, Chachi, the tutoring company, had a successful IPO, raised $400 million dollars right at the top of its price range.
Wow. Does that mean the Chinese government is maybe becoming more okay with companies seeking U.S. liquidity after the crackdowns a few years ago?
It seems like a potential shift, yeah. Maybe more supportive now.
Interesting. And just quickly, there was also something about the food delivery wars heating up in China.
Yeah.
JD.com versus Meituan.
Yeah, some social media, sparring over driver restrictions, and JB apparently planning a big expansion, hiring loads more delivery people, partnering with Starbucks.
Okay, always dynamic over there. Let's pivot back stateside. Construct Capital's new $300 million fund for U.S. manufacturing.
Yeah, focused on reimagining U.S. industrial sectors. It signals renewed interest in this space.
From who? Just VCs.
Not just VCs, also entrepreneurs with actual experience in these older industries, and significantly, long-term investors like endowments and foundations. They see potential there.
What's the vision? Just better factories.
More like creating tech-first industrial companies. The idea is these could even become a new segment of the public markets eventually.
And this ties into government concerns about the decline of the U.S. industrial base.
Exactly. There's a growing feeling across different administrations that we need to upgrade technologically. It's not just about old-school manufacturing.
So bringing in tech like mobile AI stuff that's transformed other sectors but maybe skipped over industry.
Precisely. The goal is tech-enabled competitive jobs.
Right.
Transforming these sectors by tackling the huge technical debt built up over, 25 years of underinvestment.
So they need founders who can move fast, innovate quickly.
That's key, finding those people. And the exits could be acquisitions or even going public down the line.
Definitely a space to watch. Okay, last one. Space. Northwood, co-founded by Bridget Mendler, raising $30 million.
Yeah, kind of a cool story. They're focused on building infrastructure for the commercial space industry, specifically mass-producing phased array antennas.
And the funding round was oversubscribed. Seems like investors are keen.
Very keen. Their whole pitch is about boosting manufacturing capacity, slashing costs through vertical integration, careful material choices.
They've shown results, like a 10x cost reduction.
And 5x faster deployment time compared to older tech. They apparently demonstrated this with Planet Labs.
Wow. And they're building a big new factory in California.
Yep, 35,000 square feet in Torrance. Should be operational later this year.
What about their supply chain? All U.S.-based.
They're prioritizing domestic, yeah, but also designing for international deployment. Having investors like Andreessen Horowitz and Founders Fund.
Who are also in SpaceX.
Right, that probably helps open doors. Both commercial and government customers, they want to be a dual-use company.
Makes sense. Leverage the same tech for different markets.
Their whole mission is supporting what they see as an industrialized space economy, building infrastructure that absolutely cannot fail because space is now, an industrial domain.
Okay, so wrapping up this deep dive, it really feels like a mixed bag in tech right now.
Yeah.
You've got uncertainty, right? Tesla's wobbles, the big show me the money question around AI.
Definitely. Lots of big questions still hanging out there.
But then you also have these pockets of really strong innovation and investment, like that push in U.S. manufacturing tech, and this serious effort to build out commercial space infrastructure.
Yeah, it's not all gloom. There's real building happening, and the influence of key people like Musk and just broader geopolitics, that continues to shape everything.
Well, hopefully digging into these specific stories gives everyone a slightly better handle on the different forces at play. These bite-sized insights are really just a starting point.
It's a complex picture for sure, always evolving.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.